Hello and welcome to another episode of Voice of Crypto. This is a podcast where we talk about crypto, Web3, metaverse, NFT, blockchain, and everything in between. And today we have Alex with us. Hi, Alex. How are you doing?
Hey guys, doing well, doing well. How are you?
Great. So Alex is currently traveling, and we have been trying to do this podcast from I think more than 2 months now. But finally, we both have decided to do this today. So Alex, why don't you tell our listeners your journey in crypto, what you used to do before crypto, what has been your background, and what you do currently?
Yeah, for sure. I guess I'll keep it nice and short and sweet. I've been in crypto since 2017, been trading, investing, researching, educating others, and what really got me into my journey of crypto was the fact that Bitcoin was international payments, so I could send money very quickly to like my grandparents and to wherever else I needed to without it taking too long. Fast forward a few years, I started working in a in one prominent crypto company, then in a crypto VC incubator, where I've really learned the depths of crypto projects and just Web3 as a whole. But one thing I realized is that the industry standard for understanding what tokens are and how to build them properly, like build the economies around the tokens properly, was pretty low. So decided to launch Simplicity Group, and been operating now for I think just under 11 months, creating token economies for crypto projects.
Awesome, awesome. So you started your journey in 2017. It has been a whole almost 7 years since you have seen the whole journey. So
Yeah,
from
yeah.
your point of view, what things have changed in last 7 years, probably what you used to see 7 years back, how things have moved, how the adoption has come, what are certain things which you see which have completely changed now?
Yeah. There's a few things that's changed. I guess on a macro scale, we have a different situation happening globally. We have different wars being fought. We have different levels of debt being had, particularly after COVID. So I'll answer this. There's a few ways to answer this, but I'll answer it on there's two things that's mainly changed, right? On one side is just what's happening overall in the world. And I think the reason why that is a noticeable change is because the adoption for crypto and Bitcoin in particular is partially stemmed from how badly the financial system is doing, because hence the whole point of decentralizing ourselves from it. And I think we've seen with, when governments try to enforce their laws onto people's bank accounts and close bank accounts, be that in Russia, be that in Ukraine, be that in Canada from COVID, whatever it is, it doesn't matter. All those news led Bitcoin price to go up because people started moving into Bitcoin. And I think, to summarize a long point, basically, that mass adoption of crypto is slowly turning to be based out of necessity rather than just want to be rich. So I think that's partially led by the macroeconomic state of the whole planet. And on the other side is you have obviously trends. Back in 2017, I can't remember exactly, don't get me wrong, I was just starting out, but the trends of like DeFi didn't exist yet. Now obviously we're on other trends like layer ones, for example. We're building the 5,000th layer one every single day. And I think the trends nowadays are more focused on infrastructure, whereas the trends back then were more focused on, I don't even know what they were focused on, to be honest, but just other stuff, I suppose. Not really the most podcast accurate answer, but things change in loads of different ways on the micro and on the macro scale. So yeah, it's a long conversation.
Exactly. So Alex, and you, I mean, I have spoken to a lot of people in the circles in London, and everybody talks about that. If you need to go to tokenomics, you should go to Alex. Why don't you explain our listeners in very simple words what tokenomics means? And I think a lot of project owners, a lot of founders whom I talk to, what they try to do is they just try to copy a similar kind of project, take the same tokenomics, and then just implement it. So what is the whole idea? What tokenomics means? How does it impact the token economy? If you could help our listeners about that as well.
Yeah. Tokenomics, or token economics, is simply just the economy surrounding the token, in essence. So the same way that a country with fiat currency has the central bank to determine its monetary policy, so like the money supply, the rate of interest, and so on. But then it also has the government um, to determine things like taxes and the fiscal policy, in essence. Tokenomics is basically that, but for the token. So this is why, to answer sort of your second point, why copy and pasting tokenomics from other projects doesn't really work, right? Because we can bring a very nice example here. The European Union, or the Eurozone, to be precise, the Eurozone all has the euro. Now, every single country in Europe is very different. It's not, it's way more different than America. And what you have is Germany, one country, well, I think maybe it's Germany and controlling the monetary policy, which is the interest rates and the money supply of the euro. And you have all the other countries that just have to go with it. Now they can control their fiscal policies, but still that's one major half of all the policies that they have to control money with gone. And what you get is interest rates that are favorable for Germany and Germany's economy are not favorable for the economy in Eastern Europe or Southeastern Europe or Southern Europe. And basically, the European countries are struggling. Now, I haven't done too much research into this, the exact specifics and why, but I know for a fact that they're struggling partially because they don't have control over their monetary policy, as well as all the other policies that they do have control over. And all of that to say that when you copy tokenomics off another project, what you're doing is you're just going with their monetary and fiscal policy, right? And you can't do that because your project is different. You have different revenues, you have different users, you have a different market. Even if you are in the exact same market with the exact same business structure, then you're still different because that project already captured the market share. So you're not going to capture as much market share. You're not going to have as much revenue, blah, 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 right? So you're different. And the tokenomics should account for that because you need to work out what the token actually is and how it fits into the whole business model, then how much value it can accrue. And then from there, you can start to work out everyone's favorite tokenomics table, which is the distributions and the vesting schedules, all in all to create a balance between the supply from the tokenomics and the demand that the project expects to get from its marketing and just from launching and just the users that it gets to bring on board. As long as you keep those balanced, you'll be fine. But if you're copying someone else, then one half of this equation is just, made out of thin air. So yeah.
And in terms of you, I mean, you have seen a lot of projects. Which are one of the best tokenomics which you think of projects or of particular project which you think you like those tokenomics well and they are
Yeah.
still sustainable, they're still doing well.
Yeah. I mean, there's two answers here. On one side, you have everyone's current favorite, GMX. If you don't know what GMX is, Google it. It's a bit complicated, but they have a few tokens, and the price action of the GMX token is pretty stable and nice. So they've done something right there. Long story short, what they did is they backed the token by some other tokens, and essentially sort of like an ETF, but not really. But it's basically GMX. Check that out. And what a lot of people don't really expect me to say when they ask me this question is a very staple in the industry, which is Ethereum. Ethereum's tokenomics are simple and beautiful in nature because, well, first and foremost, Ethereum has an unlimited supply, which is the opposite of what every single project does nowadays, because nowadays they think if there's a limited supply, then the price will keep going up. Well, rather the opposite. If there is unlimited supply, the price will keep going down, is what they think. So everyone's launching with a limited supply. But Ethereum has shown us that a simple burn and mint mechanism that depends on network usage suffices what the network needs very, very well. Whereby, as you have now Ethereum being burnt if there's too much usage, and it's being minted if there's, well, not as much usage in essence, right? So all to say that Ethereum has successfully created Ether in a way that a normal country has created a fiat currency, whereby it's not limited in essence. And when it comes to tokens which are meant to act as a, okay, here, this is where it gets a little bit technical. when it comes to tokens that are meant to act as a pure medium of exchange, see, then Ethereum isn't really meant for them. It's an interesting one, but basically, before I go into a rabbit hole of just token economics, Ethereum has done it very well and very simply, and it goes to show that you don't need to overcomplicate anything to have, you know, a token that's doing very well. But also, these two past answers they're nice fundamentally, right? Fundamentally, Ethereum's tokenomics are doing well, GMX's tokenomics are well, and you know, there's loads of other projects who have good tokenomics, like all the ones that we work on, of course. But at the end of the day, the market is like 95% speculative. So it doesn't matter realistically on really deep down, if you think about it, what you have underneath the hood, because the market doesn't give a second thought to what is underneath the hood, right? You have projects which launch on a particular launch pad with particular marketing, and they will be in, you know, insanely high market cap. So for example, Ethereum's market cap, I know it's very high. Does it need to be very high? And this kind of links to stocks, for instance. Does the market cap of Tesla need to be that high? Of Apple need to be that high? Like, what do these share prices actually do? Right? It's speculation in essence. And the reason why good tokenomics are important is so that when you don't have times of speculation, i.e. a bear market, for instance, you will survive and your token will do exactly what it's meant to be doing, and its price will be stable. But given that we are in this market, when the bull market starts, you know, everyone's tokenomics are sufficient in token price go up. So just a little asterisk there to keep in mind.
Understood. And we have heard about inflationary tokens, deflationary tokens. Are there any other type of tokens also which work currently, or there are other formats of tokens?
Well, inflation or deflationary, I suppose those are the two possibilities. Like you're either one or the other. I don't really think there's a third. I guess the third is you just have a capped supply and it doesn't get minted or burned. But yeah, I mean, they can all work, right? It doesn't. Here's one way to look at it, right? Even in the current times in the planet, like, you know, on the planet, we like to put ourselves in boxes. We like to label ourselves, right? It's like, oh, that person has a cat, he's a cat lover, he's a cat person, for example, right? But and you know, you label them, you have a very nice understanding, very quick understanding, but it's necessary for our survival back, you know, a few thousand years ago, to label people very quickly to understand exactly what they are. So we keep doing that, and it's definitely good for survival. But the problem is when it comes to more complicated things, it really narrows our vision and our perception of the real situation. Though to say that as well as it's applicable in our real life, it's also applicable in things like business and the, you know, to be more granular in tokenomics. Whether something's inflationary or deflationary or consistent supply doesn't matter in the slightest. What matters is how what the project decided to do fits into what they want to do and what they're actually doing. Because, you know, Ethereum, again, has unlimited supply, is doing very well. Some other projects have a deflationary supply, they're also doing very well. But all of these things have pros and cons, right? So a deflationary supply is, well, you know, everyone who's holding the token is getting rewarded just for, you know, holding the token because the supply is going down. But at the same time, is that really too future-proof? Because, you know, as you keep getting rid of the supply, you know, you keep increasing the token price, and maybe some merchants on your store are not happy because the prices of their goods keep going up, right? And people are not buying them, or people don't want to sell the token because they keep thinking that the price will keep going up. Basically, the same thing as you have in normal, you know, normal deflation in an actual economy. You know, the inflationary stuff also has its pros and cons. I keep saying cons, right? For instance, the fact that, you know, it incentivizes spending, but at the same time, it also decreases the value of each token. A fixed supply is a nice in between, but then it doesn't really help you grow. It doesn't really reward anyone. It's just a pure sort of thing in the middle, kind of like Bitcoin in essence. So it depends. It really depends on your business model, but they all work. They all can work. It's just you need to ensure that you balance out what you want to do with what these different supply mechanics allow you to do.
Right. So you mean to say there is no set formula for success of a token? Then it depends on a lot of conditions which are beyond the control of the project as well. Apart from obviously the token utility which you create.
Not necessarily beyond the control of the project. They're beyond, well, yeah, they're beyond immediate control, but they're not beyond the sphere of influence. And for example, I just did a speech recently where I discussed essentially how we create token economy. So we look at the token, the the economy, tokenomics, demand, supply, blah blah blah. Got the numbers right,
Mhm.
but then, and to answer your question, sorry, can you repeat the question just one more time? I
So,
got the
so
final bit, just the first.
yes. So my question is, there is no set formula for the success of tokenomics. Is what I
Yeah,
wanted to ask.
yeah, exactly. And the point of that whole introduction for the speech is that it needs to be bespoke. Like all the tokenomics need to be bespoke, and there isn't one thing that works for everything. So yeah, exactly as you said, there is no set formula because again, it depends on the business, it depends on the financials, on the market, on the people, on your marketing, on everything, right, all at once. And because there's no set formula, what that means is every single project needs to approach the tokenomics, on their own. However, to go on to the not on their own, sorry, but as in like you need to approach it bespoke. Like you need to do it from scratch. Basically, you can't just copy and paste, right?
Mhm.
And to go on to your second point of there are factors outside of the project's control. So yeah, so once I explain the whole token economy section, then move on to the checks and balances. In that, like I said earlier, in the real world, right? The real world is more complex than just the fundamentals that you have on your Excel table, right, or on wherever your white paper. And the real world isn't nice. So a lot of things can happen. You can have Elon Musk tweet out Bitcoin's bad for the environment, the whole market collapses by 40%, and you are in that market whether you like it or not, right? Because again, the majority of the market is speculative. Or something else can happen and your token shoots up in price. Both aren't really good. They're not terrible. They're not the end of the world, but they're not good, right? Because it creates volatility and less. I forgot the word, but people aren't as sure about continuing to utilize your product or service. What you can do, however, although you can't control Elon Musk's tweeting, what you can do is have a system of checks and balances. Now, these checks and balances range from algorithmic vesting schedules. For example, let's say you have a 3-year vesting schedule on a particular tranche. Well, rather than it being daily unlocks, what you do instead is you have the smart contract that distributes the vested tokens to whoever the parties are, has a function within it whereby, let's say, if network usage is 200% of network capacity, then unlock more tokens or something like that. I don't know, but regardless, you have an algorithmic vesting schedule whereby now, if something was to happen, and let's say, I don't know, Elon Musk tweets how great Bitcoin is for the whole world, right? And then the whole market starts to shoot up. You don't really want your token to just go like this, and then bang, right? That's not really great for you. So what you do is, as soon as it starts doing that, your vesting schedule starts to unlock more tokens, and therefore controlling the price, at least making it go up steadily, if anything. So you can do that. On the other side, you can do the opposite. You can not sell tokens. You can release less tokens if your token price is going down. You can also increase things like taxes or interest rates to incentivize people to sell, not sell, stake, not stake, whatever it is. If you have a mining mechanism, you can do the same thing there, similar to what Ethereum does with the burn and mint element. You can even do it on a very surface level with marketing. Your token price is shooting up uncontrollably. You don't know what to do. You don't want that to happen. So you, as the founder, go on Twitter and you say, hey guys, public announcement, it's going up because of speculation. We've done the maths, our real token price, the value of the token is actually around here. This is the fair value region. That might not really get everyone to start selling instantly to go back to that region, but there's a good chance that it's not going to keep shooting up like uncontrollably, right? If anything, well, not if anything, but it could have the opposite effect. People might really like the founder because of that, and make it go show up even more. But you get what I mean, right? You use marketing to your advantage. On the flip side as well, you can tweet out our token's doing very well, the value's here, blah blah blah, then people might start buying it again if it's going down. But yeah, basically you have checks and balances. You can, if the token price is going outside the railing, you can have rails in place to bounce it back in. You just need to figure out what those rails are.
Right. Exactly. And Alex, as you rightly said, that there are a lot of things, I mean, whether we agree or not, we are in a market which can just crash or just pump up because of a tweet. So my question to you is, we see a lot of these random meme coins picking up. Do they even have some basics of tokenomics, or how is it even created, or they just randomly shoot and then it just goes crazy? It's just shoot and wish for the best thing. How does that work?
You're asking some good questions, because these are questions that my co-founder and I think about a lot, like the whole deflationary thing, the tokenomics of even things like meme coins. But again, there's two ways to approach this. Number one, I'll answer the first thing. You asked, the second thing, right? So the whole shooting up is just because they don't have enough liquidity. So what that means is, I won't go into how much automated market makers work, but basically, let's say you put in 1,000 tokens and you put in $100, then the price of your token is 10 cents. You do $100 divided by 1,000 tokens, right? And that's what the automated market maker does as well. And again, I won't go into the depths, but what happens when a lot of people start to, let's say, buy the token, they buy the token and then they deposit the other side to the other liquidity, right? So I buy one token and that costs 10 cents. So I deposit 10 cents, right? The more people keep doing that, the more money there is and the less tokens there are. So therefore, the token price will also change, right? There's also a constant here at play, but again, I won't go into that. So the token price will keep changing. And if you don't have enough liquidity at the start, which is exactly what happens, Pepe launched, okay, I don't know the actual numbers, but all these meme coins, they launch at a price which is basically zero, because there's billions of the coins and there's however much, I don't know, let's say $1,000 or whatever, don't quote me on that, in the liquidity pool that the founder put in there. So as people just all of a sudden start buying it up, all the tokens start to disappear, because you pay $1 and you suddenly have like 10% of the supply. So the tokens start disappearing, and basically the price just shoots up. The market, the AMM, the decentralized exchange, it doesn't know what to do, so it just fucking shoots the price up. Well, it does know what to do. It shoots the price up. But anyways, so that's just because of liquidity. If they had a lot more liquidity in there, for example, if they had 1 billion Pepes, but then also $1 billion, you have so many people buying it, it'll barely move the price, right? So it's just a lack of liquidity that makes them shoot up like that. And then similarly, makes a very nice exit position for anyone who entered early, because now there is all of this liquidity built up because everyone has deposited it. So now everyone who bought in early, they can withdraw it by giving the market maker the tokens back, i.e. selling the tokens. And then you go back to where it started, and nothing happens again. Long story short, a nice beautiful story. But so that's why they show up. Their tokenomics are actually very, very nice, right? Now, they're nice because it's pure. There's no actors which, how do I say this? Basically, all the actors are aligned, because who are the actors? You have the project founders, but do they even have any? I mean, they normally do have tokens, right? But you have the project founders, right? They want the project to succeed. And then you just have the community. You don't have the VCs, you don't have the advisors, you don't have, I don't know, you don't have a treasury, you don't have anything. You just release all of your tokens onto the market, onto an exchange, minus the ones that are kept by the founders, right? So they can exit the little meme that they built. And what that means is you get very pure price action, in that you get price action which isn't affected by any party selling, by anyone buying for any reasons other than, well, because it's a meme coin, other than speculation mixed with tribe mentality in essence. And again, this is a very difficult, sort of like complicated topic that I'm trying to like summarize very quickly. But basically, their tokenomics are very simple. They don't have tokenomics. They just release all the tokens onto an exchange with whatever liquidity they can upload, and that's it. And what you get from that is just natural price discovery. Because as people are buying the token price is going up, people are selling the token price is selling. But the token price is affected by the vast majority just by the community that it brings. It's not affected by the investors, and this is what I meant earlier. So affected by the investors, by the treasury, by the advisors of the team, by whatever. It's just the community which is determining the price. So it's pure in that essence. And yeah, you know, like for what they are, that's fine. If you're a business, you can't really do that. Although this is what Dan and I are thinking about. Maybe you can. Dan's my co-founder. Maybe you can do that, but still, it's all in thought right now. But yeah, sorry, that was a bit convoluted. Basically, the tokenomics are very nice and pure, in essence.
Great. Thank you, Alex, for all your beautiful insights. So if people, and I know tokenomics is a very new subject which people have not yet started knowing about, but if they want to learn about it, what are some good resources to learn? Books, podcasts, YouTube channels? What would you recommend people to read about?
To learn tokenomics, there isn't too much. I'll be honest. There's hardly anything. I think, okay, there's three answers here. Number one is if you just YouTube tokenomics, there's a guy called Rodney something. He's pretty good. There's a few other guys on there doing tokenomics. Currently, there's one like the Curious Rabbit, a few other people. They do videos on tokenomics. There's a lot more people doing tokenomics. They just don't do the videos. So you have those YouTubers, right? Big YouTubers like Coin Bureau, whatever. They don't do tokenomics. So they're not really going to help. But just search tokenomics. You'll find some stuff. Now take everything with a pinch of salt at the end of the day, because it's all new. So if anyone is saying that they know for a fact something's going to work, you know, salt tap. So that's number one. Number two is you have other resources, like written resources. And I'm going to plug myself in, and our friends are Arcanum Ventures. And again, there are loads of other people doing very similar stuff, right? Whose names I can't remember because they're on LinkedIn, but add me on LinkedIn. I normally share some good tokenomic stuff. But yeah, it's, you know, we have our own alpha channel where we have loads of one pages on tokenomics, token economies, utilities, you know, dual token economies, and so on and so forth, right? So we have the alpha channel, which it's on Telegram. It's called Simplicity Group Alpha. Actually, let me double check one second what the actual
Sure. So what
URL is.
I'll put the link in the YouTube description.
Yeah, perfect. Yeah. But yeah, it's just Simplicity Group. So t.me, yeah, Simplicity Group. But yeah, we have loads of content on there. If you search Arcanum Ventures, they also write loads of good blogs and loads of good content on tokenomics, so you can check that out there. And then the final thing is there's nothing really, there are a few official things, to be fair. There's a book by a woman called Lisa Tan. I can't remember what the book is called, but it's like Token Economics or something. I've heard great reviews from that. There's also a couple, or two, I wouldn't really recommend personally any other books because I haven't read them, haven't heard about them. And fundamentally, this is the best way to learn tokenomics, right? Is you, first of all, read Layered Money or any other book that explains the history of money. Layered Money explains how money started and how we got to where we are in a very nice, simple, easy read. The book is very thin. It's about a 4 or 5 hour read in total. And then from there, it explains how Bitcoin and crypto as a whole falls into this existing system that we have. Read that if you don't know the history of money. Then from there, you know, just do some economics reading. You can even get like a high school or middle school, whatever country you're from, you know, book for economics, and that will suffice. It'll give you the fundamentals of economics. Read that. Then, you know, explore the crypto world, you know, do some trades, go on exchanges, use your DeFi Lego bricks, you know, do whatever, just participate in the world. And then combine all of that together and you'll be decent at tokenomics. Let's just put it like that. Because it's new to everyone, but the people who are doing well slash innovating in the space slash know the most are those that not only did economics, but they also come at it from a holistic point of view, where they understand finance, they understand history, they understand crypto, the tech, Web3 as a philosophy, understand economics, and all at once. Those are the people who are the ones that you should be following and listening to. So yeah, yeah.
Great, Alex. Thank you for coming on this podcast. And I know we have been trying to do this from last 2 months, but finally we made it. I think it was really worth waiting and understanding a lot about tokenomics. So people who are looking to create their own tokens, I highly recommend Alex, because I think I have spoken to a lot of people and everybody has recommended Alex. So I will put Alex's website link as well in the description link, and yeah, that's it.
Perfect. Thank you very much for the opportunity. Is has been a good podcast. Good questions. I've been on a couple of podcasts before, but I feel like the questions here are very, very, very interesting. So, no, thank you for the opportunity. Thank you to anyone who listened, and yeah, happy to speak with anyone on anything ever. So, ping me a message.
Sure. Thank you, Alex, and thank you everybody who listened to this podcast. And we'll be back with a new guest next week. And in the meantime, we all will make it. So stick around. We are going to make it. Thank you very much.